As the father of economics, Adam Smith once put it, "A nation may import to a greater value than it exports for half a century, and the gold and silver which comes into it during this time may be all immediately sent out of it. Its circulating coin may gradually decay, different sorts of paper money being substituted in its place, and even the debts, too, until it reaches ruin." The UK trade deficit has widened since 1970 due to increased competition from emerging economies, a decline in domestic manufacturing, over-reliance on imports, changes in global demand and faltering supply chains. Additionally, shifts in government policy, disrupted trade agreements, and economic cycles have also influenced the UK's trade balance over the years. While the trade balance, the sum of imports minus exports, is somewhat easier to understand, the UK's public balance of accounts is a little trickier and refers to the government's fiscal position in the form of income from tax and investment revenues minus expenditures on services, infrastructure, debt interest, and so on. Since 1970, the UK government's finances have worsened due to its industrial decline, falling revenues from trade and taxation, and increased government spending on an aging population, healthcare, and education, along with economic recessions, financial crises, and costly wars. This has caused the UK's public sector debt to rise dramatically since 1970, exacerbated by economic crashes, financial bailouts, uncontrolled government spending and borrowing, decreased revenues, and increased spending on social safety nets, all of which have worsened the debt burden. A further stressor is the decline in UK productivity since 2010, which can be attributed to a slower growth in investment, skills shortages, underutilization of technology, and the inefficient allocation of resources, rather than lazy workers. Additionally, uncertainties surrounding Brexit and changes in immigration policies may have affected productivity by impacting labour supply and investment decisions. Structural issues, such as low productivity growth in manufacturing and construction, are problematic, especially when juxtaposed with a global economic slowdown and a loss of appetite for UK exports. Even the current Conservative administration has pursued aggressive taxation policies to fund stretched public services and pay for foreign wars, burgeoning interest payments on the national debt, and pandemic-related fraud and handouts. Clearly, the UK cannot contemplate a race to the bottom, as its high costs of living and labour mean that it would not be able to compete with China, Mexico, or Vietnam in this regard, which, therefore, only leaves a high-value, high-technology sector which, in turn, demands major investment. This has forced the UK government to turn increasingly to the debt markets, further increasing its debt and debt interest payments as, to make such bonds or gilts attractive, the interest rate offered by the government for both long and short-term borrowing has had to increase dramatically, thereby exacerbating debt repayments. However, with inflation eroding bold yields, international investors are becoming increasingly spooked by the UK's worsening credit rating, declining economy, and questionable monetary policy. Thus, investors may demand ever higher returns or even decline to purchase any of the British government's gilts at all. This is borne out by an economic phenomenon known as an inversion of the yield curve. This occurs when short-term interest rates exceed long-term rates due to a loss of short-term confidence in the economy, and this metric has proven to be an uncanny harbinger of coming recessions. With record levels of both private and public sector debt and a ballooning deficit in trade, the UK finds itself at a crossroads. It can either shift back towards its rise as a mercantile nation favouring trade and industry, or it can seek to continue on the road to ruin by pursuing a service-based economy founded on digital currency printed by the Bank of England and borrowed recklessly by the British government. Unless the UK strikes new trade agreements, proactively encourages investment in technology and manufacturing, opens its free ports to global supply chains, and ceases its rampant deficit spending and the fostering of its entitlement culture, it may very well find itself a vassal nation, dependent on imports and enslaved by debt.